morning to all traders and welcome to this Tuesday's Market Insights video. Today, we're going to have a quick look on the US index, as we haven't looked at it for a while now, and also the S&P. Only two of those very interesting assets to keep an eye on, and of course, they are the ones that are likely going to determine how the markets are going to perform within the next few days, then of course weeks up leading up to the November's election. Now, it hasn't been a good day for sanctions yesterday. First of all, Mr. Trump hit Iran again with new sanctions. At the same time, we've had the former PM in the UK, Theresa May, refusing to back the reckless, as she called, internal market bill of Boris Johnson, while at the same time, we've also had Cyprus refusing to support the sanction bill against Belarus. And this is because they're actually expecting the EU to respond with sanctions against Turkey first before they go ahead actually and support that bill against sanctions. So the next meeting now, I think, is going to be around the 12th of October. So you see, this is likely to have the situation remain uncertain in Belarus and probably as well in the Mediterranean until at least we get some more clarity from the ECB board and from the rest of the European members. So starting on the dollar index, it has been actually quite supported, and that's because we've had a big drop in equities in the beginning of the week yesterday. That was because we've heard by news some banks failing to stop money laundering up to 3 years ago or so. So the banking sector has dragged down the rest of the equities, and the slide now continues. But the question here is it going to continue, or is it going to be only short-lived? Well, from a technical perspective, we are really sitting at a very critical level at the moment. But before we go to the S&P, let's have a quick look first on the US index. As you very well know, we've talked about this move down from the 97.70 the previous quarter. That is going to be a continuation on the downside for primary wave 3. So it's either 1, 2, 3 or ABC. Still, I see more downside. That means that we haven't ended down here this move. And I believe we haven't ended this move because, well, wave 2 is very sharp, right? So we need a wave 4 that is going to be lasting a little bit longer, plus is going to be perhaps in most cases to support the rule of alternation is going to be also wider. You could call this wave 4 indeed. Someone could say that this is wave 4 and then we had 5 down here, okay, and then this is like wave 1 and 2 and 3 and 4 and 5. But I doubt this is the case because if we draw out the Fibonacci's over here, right, from this move to the upside, we get the 138.2 extension down here, a false break for wave B, which now seems to suggest that we'll have 1, 2, 3, 4, and we're going up for the 5th wave to the upside, likely to take us around the 95 level, just before the 95, to be honest, for wave 4. Now, if we take the 50 Fibonacci as well of wave 2 and 3, including the false break of B, right, then we go to the 94.09, which is still could be considered a good level, but what I want to really shift your focus to is the 61.8 Fibonacci extension of wave 3, okay? This is at 94.65, which is a very close level with the 61.8 Fibonacci extension for wave C, right? So in flat patterns, do not forget that we'll have an ABC, ABC, and 1, 2, 3, 4, and 5. Currently, we are either still in wave 4, okay, which could be like some sort of zigzag over here with another move to the downside expected, and then another impulse to the upside for wave 5, or we ended this correction down here, and this is now wave, the last wave 5. So it's 1, 2, 3, we're going to see a 4 and a 5 to take out wave 4. And from there, we can start looking for prices to move lower, right? And for that low, I'm looking at the Fibonacci extension, the 100 Fibonacci extension of waves 1 and 2, okay, which is around the 90.48 for wave 3. Now on the S&P, okay, something interesting happened here last time. It had me tricked, but then I measured the waves and we're still good. I still remain bullish, but despite the fact that we're looking at 1, 2, 3, 4, and 5, which is the end of this wave, and then we're looking for price to move down. I remain bullish. Why? Because we're still above wave 3. Okay? So we could still be above wave 4 and be bullish, but for the moment, this is a very critical level for me, the 32, 35 or so, right? We do have a false break, like a tiny one on the intraday basis here this morning, but I'll be honest, if we bounce here, yeah, and we don't break that level actually, that means that we're still remaining impulsive to the upside. And I would be expecting prices to move up to take us to at least the 36.92, excuse me. So it's either we ended up here, okay, and this is now wave 1, wave 2, and this is a multi-structural degree to the downside with 1, 2, 3, 4, and 5. So it's going to be then 3, then we're going to get a 4 and a 5, okay, which means we're going to go to fresh lows, okay, below 21.86. But this is like perhaps next year. But if we remain above that level, I'm looking for at least another leg to the upside, right? Now, there is another scenario into play, of course. This is wave 1, and this is wave 2. And that means that this is wave 3, right? And then this is wave 4. And then we're going to get another move to the upside again for wave 5. This is going to make an impulsive rather than a corrective, as I have here, move to the upside, right? Because this would be 1, 2, 3, 4, and 5 for wave 1. Yes, that would be then again this move down here. Then we would have 1, 2, 3, 4, and 5. Actually, that would be wave 3 down up here even, you know. 1, 2, 3, 4, 5, and then we're going to get another correction, and then 1, 2, 3, 4, 5 again for another move to the upside. So in this case, though, we'll probably look at this level. If it holds, we're going to probably go to fresh highs above the 36.92, right? In case we break the 36.92, it means that wave 3 is not here, okay? In case we remain below the 36.92, if we actually move higher, then that means most likely that this will be the end of wave 5, and we're going to start moving lower from there. So thank you very much for watching, and we'll speak again tomorrow.